Hello and welcome to LAT's Weekly Market Insights. This week, the market has been dominated by the economic calendar, which has seen a raft of high-tier data ranging from inflation through to rate decisions from the RNBZ, the Bank of Canada and the Bank of Japan in the early hours of this morning. Now, as always has been the way of late, it's the inflation story that dominates the headlines, with the rate decisions taking a back step. The inflation data on Tuesday was posted way above expectation, prompted a rapid sell-off in markets before they immediately bounced back not long after the open to come back and test those all-time highs. Now, this narrative of increasing inflation and the risk that poses, and is it going to be transitory or not, has been around for a while. However, it's never really been reflected in the charts as a huge threat. However, this for the first time is in question. As we come across some of the US indice markets, we can see some of the risks that are being posed. As we look towards the Nasdaq, the tech sector, which has been so dominant over recent months, and we come into this hourly chart, we can see this key reversal price pattern of a double top which failed at the all-time highs. Now, that double top MPO has just about been achieved now, reaching back down towards these lows. And are we potentially now on the US Open here seeing the formation of a lower high? We are failing at another key resistance level through here. However, despite all of this, fib levels do still remain intact from the low up to the high. We did come straight off that 61% retracement, and we still hold above the trend line that has been in play for a long time now here on this 4-hour chart, from the lows posted back on the 19th of May. If we put this trend line in from the lows, we can see it running up through here, and it's this trend line which is being threatened for the first time over the past couple of days. A breakdown through this could open up some sort of a chink in the armour here for the Nasdaq and what has been such a dominant and bullish run. It's a similar story as we look at some of the other US markets. Looking towards the S&P 500, we can see that double top formation, also neckline broken. MPO as of yet has not been achieved, but we're seeing the potential creation of a lower high here. And again, a breakdown through this low at 4340 will be a significant moment. The Dow Jones continues its attempt to try and break its all-time high, but is unable to do so again. If we look at this 4-hour chart, we can see these failures multiple times now through this level, and that all-time high posted back on the 10th of May, as of yet untested and unbroken. Now, failures again here, this double top formation that's in process again, a move back through 34,706, which would be the neckline for this double top, could open up further downside moves. So there are early warning signs here that these indice markets may well be starting to wobble. It's a similar picture for the European markets as we come across to the DAX. Now, the DAX, very similar to the Dow, has been trapped in a 4-hour range, with these highs being posted up at the 15,800 level. We sold off of that level hard at the start of this week, and we saw a little pause and consolidation in around the 15,600 region before now breaking lower. We've got key support which we are just approaching now. Key support resistance here back from the 10th of May. However, a move back down towards the 15,300 lows previously posted would not come as a surprise. So we're seeing weakness through this afternoon off the back of a hard week with high inflation figures, and also that ever-present threat and spread of the Delta variant of COVID-19. We've seen now numerous states across Australia and also Europe starting to show signs of going back into lockdowns. Now, this we've seen previously will not be taken kindly by the markets, and perhaps we are seeing some of that negativity unfold today. As for the Kiwi and the Canadian dollar, who went through their rate decisions, it's largely unchanged business. Okay, that both central banks were more hawkish than potentially expected. However, both charts continue to just trade here within a range. Kiwi dollar stuck within the range back here, the high formed on the 6th of July and the lows back down here on the 13th. We sit right in the middle of that range here with no clear direction at the moment, and a chart which for me personally I won't be going anywhere near. Dollar CAD here now shows a little bit more direction here on the hourly chart. We are testing up towards these highs. More so driven here by dollar strength. Okay, that dollar strength coming off the back of that inflationary trade and the prospect of a rate hike from the Fed. So the interest rate decisions here not having too much of a long-term effect for the Kiwi or the Canadian dollar, and once again we're now just looking at that inflation trade, and we're looking now for key levels coming into next week to behold, to figure out, are these indice markets in the US going to continue their bullish charge, or is this strong selling that we're seeing through the afternoon here going to persist, and are we going to be taking out some of these key levels and key lows to suggest some further downward pressure? The important thing to remember with all of these moves within the indice markets is that we are still in strong long-term uptrends, and whilst this narrative of inflation is around, we must be cautious, but it shouldn't prevent us from looking to buy should we find some support and try to ride the opportunity to bounce back and the continuation of these major trends. That's all from us this week here at LAT. Please do join us same time next week.